actually was curious about, so one of the reasons you cited was the continued strong demand in the economy. And I was curious about where that might be coming from, because on one hand, you look at least in terms of fiscal policy, the pandemic unemployment insurance payments have ended. The bonus payments that families got during COVID have ended. The expanded child tax credit payments, the monthly portion of those have lapsed at this point. So there's this question as to whether or not Americans either are or are not flush with cash. And if they're not flush with cash because the fiscal spigot has pretty much spent out, are we still anticipating this really strong demand, this pent up demand that we've been experiencing, for example, over maybe the last 6 to 8 months?
I think it should calm down some from the last 6 to 8 months for all the reasons you said. But I also see a number of reasons why demand will remain strong, and certainly stronger than the course we were on prior to the pandemic. The first is what I and other people have called excess savings stock. People got a lot of these transfers and they didn't spend all of them. Mm-hmm. Also, especially in 2020, people cut back their spending on travel, restaurants, movies, all sorts of things. That means people have more cash today than they had going into the pandemic. So they still have the ability to spend more. Second, the federal fiscal response is mostly over, but states are flush with cash, and you're seeing more states increase spending or cut taxes. Third is the fact that interest rates have been so low. And for certain types of interest-sensitive spending, especially cars and houses, that really matters, and that's through the central bank. And then finally, I think there's still some pent-up demand, especially for services, that people are to some degree taking more vacations, and as soon as it feels much safer than it does now, we'll take a lot more. And I think that's probably still a factor, but that's very speculative. We've never been through an experience like this before.
Mm-hmm. In talking about some of the other effects, I'm curious about the interplay between tight labor markets, the large demand for labor, and about inflation expectations. As employers have to bid up wages in order to lure more employees back to the market, are they then in turn having to raise prices in order to accommodate that increased cost to their bottom line? Is there any reason to be concerned about a wage price spiral as expectations sort of get caught up in the demand for higher wages, which then repeats through higher prices, which then repeats through higher wage demands, et cetera?
That's a great question, and no one knows the exact answer to it. A wage price spiral used to be an important part of the inflationary dynamics in the 1960s and 1970s. We haven't seen one for 4 decades, and it's not clear we're seeing one yet. Now, one view is that they only existed because there were a lot of labor unions, and there were a lot of contracts that specified cost of living adjustments. And without contracts like that and labor unions like that, they're a thing of the past. That's possible, but I'm less sure. I think it's more likely that we haven't had wage price spirals because we haven't had much price inflation. Now that we have a lot of inflation, people are going to be asking for more wage increases. They may not get them right away, but they'll get them eventually. And conversely, now that businesses have to pay their employees more, they're going to want to pass those costs on to consumers, and they'll be more able to because so many other businesses are doing the same thing. So I expect it to come back. And when I say spiral, that doesn't mean it goes from 7 to 8 to 9 to 10 to 20, but it could be just a source of keeping inflation high above the 2% the Fed would like it to be.